Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I am giving the twin webinar once a month titled Tracking the Forex Market Together, Part 1 and Part 2. The basic idea of giving this webinar once a month is to give more emphasis with regard to the trading strategies. Identify the type of moves the players are making in the market and accordingly try to fine-tune your trading strategy so that you'll be able to consistently earn money from that other market. Thereby, you need not become bullish or bearish. You need not mentally or emotionally become bullish or bearish. Once you become bullish or bearish, what happens? It takes longer time for you to reconcile from that, but the players would have reversed the market much earlier than that your expectations. Then you continue to get the surprise from that other market. Okay, fine. When you get the surprise from the market, then we might get stunned and look what could be the trading opportunity. And you find that continuously the market is making the reversal move. Then ultimately you decide that market has reversed. And then finally you come across some technical analysts telling that it has reached the resistance, the market could reverse. Then you go in for a sell and buy trade. You miss initially a buy and sell trade opportunity. Then you find that, okay, better late than never, so let me go for a sell and buy trade opportunity. That's what you come across in the market now. Euro and GBP have gone up like anything from that of Friday's move. Friday, after that of the non-farm payroll, there was a continuous drop of about 150 pips and above in the net change in the case of Euro and GBP. And everybody thought that Euro could go to 1.19 and GBP could go to 1.53, etc. So ultimately, that created the bearish feel, and predominant of the traders holding the long positions out of margin fear, they liquidated the long positions. And happily, the players have bought all such sells at the lowest level around 1.25 in the case of Euro and 1.5950 in the case of GBP. They accumulated all the positions. What the players have done now, from yesterday, they continuously gain the levels in the case of Euro and GBP, and every level, every rise, whoever is selling, they are simply absorbing all the sells and going up, absorbing all the sells and going up. And it is the second day rise. And you know pretty well the players do not make the hat trick. And what happens? We will see the forecast. First of all, with regard to tracking the forex market, what I do is I expect everybody to follow the three components, namely the derived forecast, then the market reading, and finally the trading strategy. So what is the derived forecast says? And today is 7th of October. The market is expected to make swing and firm up move, swing and firm up move, and also rise during that of the US session. So all through the day, they are expected to gain levels in the case of Euro and GBP. And if you look into that of the levels from 1.25, they just gained up to 1.2665. And similarly, in the case of GBP, 1.5954, they gained to that level of 1.6115. And also in the case of yen, from that of 109.85 or 65, they dropped it to 108.39, and the estimated low was around 108.25. So similarly, in the case of CHF, also they made the drop from that of 0.97 to 95. And in the case of Canadian dollar, from 1.12, they dropped to 1.11. And Aussie also, I was telling you, it is going to lead the rally and lag behind. And from that of 0.86, it has gone up to 0.88. So now what is going to happen? For that, we need to do the market reading. For that, we note down the initial lows and the highs set around 3:30 GMT during that of the Japanese session, and then try to find out what sort of moves the players are making in the market. Then afterwards, we take the decisions on the trading. So now we are in the European session. So the same initial lows and the highs set around 3:30 is valid throughout the day as the initial lows and the highs till end of US session. Now Euro formed the low 1.2605 as the initial low, which is not breached, but the high was 1.2662 initial high, but they went 3 pips above and come below that. So you can understand the intention. They made a brief upward stop and in order to make a slide in the case of Euro. And you know that they will trap either way, the traders. So they are not bullish or bearish. They only try to see that how the traders become bullish and bearish alternatively in a delayed fashion. So after the first day rise, they don't become bullish. Second day rise, they become bullish and try to take buy positions after the rise. And the players know very well by dropping, they'll be able to earn from such breakout traders. When this resistance is being breached and gone above, then immediately traders think that, okay, the resistance has turned support, the market might continuously gain the level, but the players could simply make the drop. So in that way, what happens, those who have taken the buy positions, they will simply keep stop and the stop will be hit. And immediately they will think that market might, it was only a bounce back, market might drop. So they take the sell position, but the players continue to rise. So this is what you come across. Every session start, they make the swing and then subsequently they make the gaining move today. And in the case of GBP, 1.6032 was the initial low and they just made a brief downward stop. And as I used to say that they make the cunning move first before making the intentional move. So they made about 6 pips downward stop below that of 1.6032 and quickly gained the levels and breached the high 1.6086, went up to 1.6115 and come below 1.6085 during early European session. So you can understand how they make a downward stop and then hit all the long holders stops and then gain quickly and induce the short sellers to do the short covering above and also hit the stops above that of the high and start making the slide. So either way stop happens, they are doing it at the moment. So that is what we need to understand. Then accordingly, we can plan our trades. Then in the case of yen, 108.69 was the initial low and they breached and came below 30 pips, 108.39 and still holding below that of 108.69. So they are likely to make for the downward move. Already they started making the contrarian move, Euro negative net change and USDN negative net change as a contrarian move to make the downward move in the case of Euro Yen. So you would have noticed yesterday in the sequential trend reversals, they handle the commodity crosses and the commodity pairs. Now they will be handling the yen and the yen crosses. So that is what you come across now. The contrarian move, Euro, USDN and GBP are in negative net change as a contrarian move to make a downward move. Then afterwards they will come to the of the majors. And what happens this time, tomorrow you find by 18 GMT FOMC meeting minutes. Then Thursday you come across BOE interest rate decision and the asset purchase facility are going to be announced. So normally what happens during the full week, if the full week is there in a month, then you come across that both ECB and BOE announcements happen and then also the non-farm payroll. Then they make all the volatile moves for that and then subsequently make the trending move. But what has happened this time that only the ECB interest rate decision and non-farm payrolls were over and BOE interest rate decision falls on coming Thursday, that is 9th of October. So till such time, they will be making only the either way moves. So the trend reversal will continue during this week also as a volatile move. And from Thursday onwards, they are expected to make upward moves. That is what I explained yesterday during my Asian Session Live Market Analysis webinar, the expected market moves for the entire week. Then CHF 95.78 is the low they just formed and 96.20 is the high. They not breached the low, the high. And Canadian dollar 1.1129 is the low, 1.1184 is the high. They are not breached the low, the high. And Aussie 0.8732 was the initial low. It just breached it by about 6 pips, came down to 87.26 and went up and breached the high 87.80 and went up to that level of 88.11. And now trading almost close to that of 87.80. So they are here to do either way stop-ins in the market. That's what you understand, that they made the downward stop-in and then subsequently upward stop-in. Downward stop-in, upward stop-in. Also here, no downward stop-in but brief upward stop-in and come down. So don't think that we can do sell and buy trade. We need to find out the type of moves they are doing it now. So when you are tracking the market and trying to do the trades, first of all, we need to find out what the forecast says to have a gross picture about that. Then subsequently, we fine tune it using the market reading technique. The gross forecast says that swing and firm up are the expected moves for all the 3 sessions. And then the market reading says that they had done the either way stop-ins. During the Japanese session, they made the upward stop-in and also the downward stop-in. And now you find the market is within the range of the initial low and the high after making upward and the downward stop-ins. So they are expected to make either way moves in the market and also handling the crosses. When they are handling the crosses, the majors will be making the swings within the limits. The majors will be making the swings within the limits. So now euro is around 1.2623. It can come down up to that of 1.2605, not more than that. It will be making swing because they will make a swing without breaching the high or the low and handle only the crosses, yen crosses especially. Then similarly, GBP can come up to that of 1.6026 from that of 84 level, that was the initial high. So they can only make a small swing. Then similarly, here also they can make a swing, but it is in the middle level in CHF. So there is no point in taking a position. So that way we'll be able to take a decision and try to take the positions accordingly. So now after taking such decision, as long as we are human, we are bound to make mistakes. So we cannot say that all of our decisions will become 100% perfect. Nobody will be able to say in this world that all my decisions have come true. Because there are so many decisions which are influenced by emotions. And emotionally, if we take some decisions and such decisions become erroneous, 99% they become erroneous. Emotional decisions become erratic. So ultimately, whatever the decisions we have taken, we will not be able to justify whether it was an emotional decision or a decision made used on the studies and also when the mind was calm. So we have to give the benefit of doubt to that of the emotions. So we use the trading strategy to limit the risk. In the event if the decision was taken emotionally, our trading strategy should limit the risk. So you are able to understand that the forecast, whether it is based on my algorithm or based on any technical studies or fundamental study, the forecast is a forecast. And the market can just make the move in tandem with that other forecast, or it can move against also. So against the expectations also. So if you ask any technical analyst, what was your call on Friday after the drop? Many would have said that Euro and GBP will make further downward move. But after seeing Monday's move, then they will say, okay, this is the support and it was supported well and market is bouncing back. So there is a scope for the market to go up to the next resistance level. So that is what anybody will say. So if you ask him, no, Friday you said like this and you are just making a contrarian view on Monday. If you say like that, you become helpless because you go with it of the market moves. So ultimately the forecast is a one which is supposed to give us what is going to happen down the line for about 10 to 15 days or about a month or about a year or about 3 months. That is actually called forecast. But on Friday, if somebody would have given the yearly forecast, would have said that euro will come down to 1.16. On Monday, if he gives a forecast, he will say that it can go up to 1.32. So this is how they will try to give the forecast. So as trader, what is important for us? Okay, the forecast for down the line for 1 year or for about 3 months or till end of the year might be euro might be going upward or euro might be going downward, whatever it is. But if I take a position, I am not going to hold it for about 3 months. I am going to just do the trade within the session or within the day or within the week. So I need to have the forecast for the week so that I'll be able to close the position. And in the week, anybody knows that the market cannot continuously rise for all 5 days or continuously drop for all 5 days. It has to make up and down move. So when exactly it is going to make an upward move, when exactly it is going to make a downward move is a priority. And once you get that information, then you will be able to fine tune your trading ideas. So that is why we take the forecast, and I showed you session wise forecast for all the 5 days of the week. Then we go for the market reading, note down the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs, and try to find out whether the market is near the low or near the high and what sort of moves they are doing it in the market. Then try to commit positions. So for that, we need to know the timings of the market, the timings followed by the other players. So here we are in the European session. So the session started around 7:30 GMT. We are at 8 GMT, 30 minutes past the start of the session. So now we will be able to find out from the live market code page in 30 minutes have they breached the high or the low. And those of you who would have watched the market from that of 7:30 would be knowing that they breached the high and come below that of the initial high. In the case euro, towards the close of Japanese session, they just made an upward stop and come down below. So they are only making a small swing of about 30, 40 pips in the case of the euro. And in the case of GBP, and you know that whenever the players want to change the market sentiment, they use GBP. And you know, on Friday, GBP was the currency which made that drastic drop of 185 pips. So immediately, which has created the bearish field. And now you find GBP is the currency which has gained the maximum among the currencies. So always they use the GBP as a currency to create the market sentiment. So once they use GBP, you might be questioning why BOE is not questioning them or whether there is any understanding and things like that. It is not like that. Basically, euro is heavily traded currency. Next to that, the volume is relatively less in the case of GBP. And so the players can create quick moves in the case of GBP to change the market sentiment. That's why I always say that the players create the market sentiment, and once the traders commit positions, they act against that of the traders. Keep that in mind. And that is going to be the order of the day, and you'll come across every time that is going to happen. So ultimately, we need to find that we should never become emotional. Why? Because once you become emotional, you tend to follow the trend, what is being explained by various analysts. The trend, the analyst will say, trend is your friend, the market is bearish, so better do sell and buy trade, but don't sell after the drop, but after a bounce back, sell or go in for a technical trade in the event if support turns, this resistance turns support. That's what the technical analyst will be able to give. And ultimately, what the players do it, they just pretend as if the market is making the move as per that of technicals and fundamentals alternatively, and try to see that the traders are trapped. So sometimes they highlight the technicals, sometimes they highlight the fundamentals. On Friday, they highlighted the technicals, and on Monday, they highlighted the Friday they highlighted the fundamentals, namely the non-farm payroll is phenomenally good. So Euro and GBP have to drop. All currencies are expected to show US dollar gaining move. Then Monday they said technically everything is oversold, so all have to go in for a relief rally. So it is technical which has gained importance, and all the currencies started gaining, and found that it is also gaining today. So everybody will think that, okay, the technical relief is just a bounce back, so we can sell. But after that, it is continuously rising. So I have to stop out with a sell position. That is what they will think. And later on, find out once it is stopped out, the market start making the slide. Then everybody will say, the technical analyst will say, okay, it is only the bounce back. So all the technical corrections you need to take sell. So after the event, when GBP was around 1.6115, they will not say that you can take a sell. But once it breaches this support and come below that and stay, everybody will say that no, it is only a pullback, so you can sell, it will come down. But it may come down only about 10 to 15 pips, afterwards bounce back. Then you will be trapped. Then the analyst will say, I was telling you, use the stop. So the disclaimer is there. So ultimately, the traders should not become the loser. So what the trader has to do, he has to note down the session's timings followed by that of the players. Track the players. Don't track any of the analysts or any of the fundamentals. You track only that of the players. They are trading against us. So in that, we use only the live market code page and try to find out what they are doing it in the market, near that of the high, near that of the low, etc. As I was telling you that they just made the slide. So I'm waiting for them to come down so that I'll take a buy. Don't think otherwise. I can take a sell, small sell, but I can only earn about 10 to 15 pips. And once they form that low, and then I will try to take a buy, so that by end of the session, I'll be able to close it with a profit. Now, these types of moves are very important. So there are three categories of types of moves. One, the moves which happen in less than 30 minutes. So they are all quick moves. And these quick moves are named as stop and a false move. Stop and we have seen in the case of GBP, it has gone above that of 1.6084, the initial high, went up to 1.6115, above that of the psychological level 1.61, so that there will be plenty of stops of the short sellers. They hit the stops of the short sellers, started making the slide. And once it comes below that of 1.6084, in less than 30 minutes, we understand, okay, it was an upward stop and before making a downward move. Here, similarly, 1.6034 was the initial low. They came down by 6 pips and reversed in less than 30 minutes during late Japanese session. We understand that, okay, it was a brief downward stop and then they wanted to make an upward move. So after the stop and if they made the downward stop and you identify, then do a sell and buy trade. After a downward stop and we simply do a buy and sell trade. We'll make 100% profit. We have seen it, no, today, how exactly they have made the moves. So give importance to that other type of moves. Then the next one is a false move. This is they pretend quickly. The stop point is also a quick move and a false move is also a quick move. They just make a move closer to that of the low. They come up to that of the low, don't breach the low and reverse in a matter of 30 minutes and breach the high and stay above. So from that of the low, they come up to that of the, from that of the high, they come to low in less than 30 minutes and reverse and breach the high and stay above in less than 30 minutes. That is called false move. They pretend as if the market is going to collapse before the data release because everybody is nervous what is going to be the data. They simply make a drop 1 or 2 minutes before that of the data. And once the data is out, they just come up, stay above that of the high, start making an upward move or a downward move. If they make an upward false move, then a downward move. So always before that of the data release, they make a false move, which is also a quick move. So all quick moves are false moves in the market. Understand that. Whenever they make a quick drop in Euro and GBP, don't become bearish. Understand they are going to accumulate buy positions. That is what happened on Friday. Now we are able to see, yes, they have bought everything in order to book profit after gaining the levels. But on that day of Friday, everybody was nervous. Nobody wanted to buy. Everybody was giving the caution in fxtrade.net. Don't do any bottom fishing. You might come across for the drop. So that is human tendency because everybody wanted to tell all those things for the good of the others only. But when I become afraid, I can easily make others afraid. That's what is happening in social networking. Once I become cautious, once I become afraid, then I spread the fear among others and everybody will become afraid. Then the next one is the move which happens for more than 30 minutes up to 2 hours. So which is called an extended move. So this also what they do is they just go above that at the high and stay there for more than 30 minutes up to 2 hours. Quickly they just gain and hit the stops and stay there. And so that the traders become afraid when they stay for a longer time, then they think that, okay, market is going to have further breakout on the upside. Then they will try to buy. But without giving profit to that of the high level breakout traders, they simply hold the market and suddenly reverse the market and drop it after 2 hours. So once you go in for a breakout trade, in that if the position is not making profit within 30 minutes, understand you are trapped during that of the extended move. Immediately close the position and take the sell position instead of a buy. You will be able to see the intentional move which follows after that of the extended move. So they just make an upward move, pretend as if it is going to rise and then continue to make a drop for 2 sessions on the start of the 3rd session. That is called intentional move. So the intentional move is the slow move which shows the real intention of the players. Whether they want to drop the market or whether they want to rise the market will be shown during the intentional move. And you know, after that non-farm payroll, they quickly made the drop within a session. From 12:30 GMT, they made the drop after the announcement of the non-farm payroll during late European session and all through US session. That's all, a quick drop they have made it. And yesterday you would have noticed that consistently pip by pip they have been gaining the levels. And today also pip by pip they have been gaining the levels. That is actually for 2 sessions on the start of the 3rd session now. So after the 3rd session, they started making the slide. The slide can be on the sideways or it can be just a deeper correction also. So that we need to find out whether we can do a sell and buy trade or wait for the drop to take a buy so that you will be able to book profit during further rise. So this is what their decision making is. Then whenever they are handling the during the mid sessions, they handle the crosses. Whenever they are handling crosses, they make the swings without breaching the high or the low. They make the swings near that of the high, near that of the low, or between the low and the high. That is called a swing. So these are all the types of moves they do it, and nothing to do with it of the US dollar sentiment or the other major sentiment or euro sentiment or GBP sentiment, yen sentiment. These are all hypes. These are all the information we get as an input so that we easily become emotional. And everybody caution you that don't become emotional. Give all the trigger, give all the stimulus for you to become emotional, and say don't become emotional. Control your emotion. So that shows that those who are giving the input are not in a position to control their emotions. That is why they spread the emotions or the fear among that of the traders. So now, after understanding what are the type of moves they have done it in the market, so let us go in for trading. Then afterwards, I will explain to you in the event. So the trading decision when the market is near that of the low, not breach the low for more than 30 minutes from the start of the session, we try to take a buy position near that of the low and keep 30 pips below the hedge order to limit the risk. And the take profit, we just take the position or close the position near that of the opposite side. If we take a buy near the low and close it near that of the high as the exit. And when the position start making profit, we use the trailing stop in profit making position and remove the hedge order. When the position is making loss, we use the hedge order to limit the risk. Once the position makes profit, we use the trailing stop. Why? If you use the trailing stop, they hit the stop, doesn't matter. We lose the position, but we don't lose our dollars. We don't lose our money. Then again, we can re-enter in the market with the margin released. So always keep in mind that we need not be possessive of these levels, because somebody has taken a euro on Friday, that is before that of the non-farm payroll around 1.26, might think that it is next to impossible for him to book profit, so he would have closed the position around 1.25. So when it comes to 1.2615, he views that it is a sell opportunity. So it is a question of market perception. It is a question of how you perceive these levels. And invariably the charts are the one which induce you to perceive it wrongly. That is why I don't recommend charts to be used for viewing all the currencies, because it only induces you to, because when you compare it to that of much higher level, the charts say that the market is in the downtrend. When you compare it to that of the lower levels, the charts say that it could go up. That is why all the analysts end up in telling, in the event if it breaches the resistance, it will go higher, 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 higher. In the event it breaches the support, it will go lower, 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 lower. Okay, what is going to be the next move? I don't know. It can be up or down. So that is how, when you look into that of the charts, we perceive it differently. We may say that we are objective, but we become subjective by referring to that of the nearby levels or the far off level. Is there any unbiased condition of selecting the levels? No, not at all. We only find in the chart the previous higher and try to connect the higher levels to that of the next lower level. It is a biased estimate of drawing a horizontal line in a chart. And none of the occasions the market find that it can make a straight downward move. And that we statistically call it as a linear line. And the market does not express linear descending or ascending. It only makes curvilinear moves. And we don't give importance to those statistics because we do not know. So what we do is we try to use the chart and apply various lines and simply say that it can go up, it can come down, trying to cheat ourselves. Now, I will try to take the positions. Now, euro is closer to that of the low 1.2605. So we will try to keep a buy limit order about, it can be a false move up to that of the low, or they may make a downward stop. But as I told you, they are handling the crosses. They may make only a false move up to that of the low. So I will try to keep a buy limit 10 pips below that of the current market level, 1.2607. I do not want to take a blind chance, so I'll keep 30 pips below the hedge order. The sell stop 1.2577. Hope you are able to understand. Now the low, I am just perceiving the low, and market is closer to the low. So I will not just like that jump into the position. I'll wait for them to come closer to low, because it's going to be the mid session afterwards, and they are likely to make a swing between the high and the low without breaching the low and the high. So 2 pips above that of the initial low, I'm just keeping a buy limit order. The chances are bright to get it. And in the event if they don't fill it, then I will wait for the late session and try to see what sort of moves they are doing it, and then try to enter into the market. Because during the early and the late sessions, they handle the majors. During mid sessions, they handle the crosses. So you find that all these currencies are showing positive net change. These two currencies are showing negative net change. That is how they handle the crosses, which is also called as the contrarian move. Then USD CAD in positive net change, showing the USD gaining move. Australian dollar is showing positive net change, showing the USD loosening move or weakening move. So that is referred as a contrarian move. So that is a remark from Martaza that UK data is negative. So what happened to the market? It has not made any significant drop from there. So anyhow, then I will try to keep a buy limit order in the case of GBP. Because GBP is the currency which can quickly make moves and create the market sentiments. And it is in the middle level at the moment. So they may not come up to that of the low, and they may come about below that of the psychological level 1.6050. In between these two levels, the psychological level is 1.6050, and they will try to come below that of the psychological level 1.6050, so that the traders turn bearish and start selling. So I will keep a buy limit order $1.6045 with the sell stop $6015. Hope you are able to understand how I have come to this particular level, because between 1.61 and 1.6025, the psychological level is 1.6050 in between this. And normally, once the psychological level is breached, the traders tend to take sell positions, or sometimes when the pivot point is breached, or sometimes when they breach the other Fibonacci retracement levels, etc., they immediately go in for the opposite trade. So normally the players don't go into the depth of all the statistics, because they are flooded with money, and they will not apply their mind in all other studies. They will only act cunningly. Okay, well, what the analysts say? No, once it goes below that of 1.6050, then the market could come down. Okay, you take the market up to 1.6040 and reverse it. That's what they give the instruction. So you find that they will come down pretend as if it is going to come down in a big way and simply reverse the market upward so that those who are taken the sell after the drop get trapped. So ultimately, we are the one to follow the technicals and fundamentals. The players don't follow. Then why should we also follow? Why we should get fooled by following it? That's what we need to understand. Because as long as the market is manipulated, none of the statistics will or the fundamentals will work in the market. It will appear they are working, but ultimately the players are going to use them to trap us. So why you knowingly get trapped again and again? In the case of yen, 108.57 is the current level. As I showed you the level 108.69 is the initial low. They are still staying below that of the initial low. So they are likely to come down. They are likely to come down in the case of USDN. So I will take a technical trade of sell. $108.57 and keep the entry stop or the buy stop for the sell position. $108.87, and they are likely to come down. Probably they may test 108 or slightly go lower than that in order to create the market sentiment and then come upward. So they are likely to breach the low since they are staying below that of the initial low for more than 2 hours. They are expected to come down drastically, and that will give them change in the market sentiment. Okay, now in the case of Australian dollar, as I explained earlier occasions that the commodity pairs lead the rally and lag behind, Australian dollar, they just breached the initial high 87.80, that is the initial high, and then gone above and still holding above that of 87.80. So when they are holding above that of 87.80, they are likely to go upward to breach the high again, since they are holding above that of the initial high for more than 30 minutes. So I'll take a buy position. With the sell stop $30 pips below that of the market. Okay, these are all the trades I envisaged, because as I told you that Australian dollar is staying above that of the initial high. Whereas in the case of GBP, it has not stayed above that of the initial high. They are likely to come down, and they will handle alternatively in order to handle the crosses. And then later on, you will find towards close, they will make one quick drop and then rise it. So carefully watch, and then you'll be able to understand on what basis I kept the limit orders in the case of Euro and GBP, and I taken the straight positions in the case of USDN and Australian dollar. These two I taken the position. Here I kept the limit order to get it filled. Hope you are able to understand this. If you've got any questions, you can ask me. I'll be able to answer to those questions in the chat window. Then Sherlan has given a comment. I have already taken a shot from GBP and a buy stop hedge. Okay, fine. Now you have to carefully keep stop at entry in the case of US, in the case of GBP sell position, and once they come down, try to close it. Okay, carefully watch and trade. Okay, quick questions from Victoria. The highs and the lows in your list or daily? No, the highs and the lows I note down from this live market quote page by 3:30 GMT, and this live market quote page is actually set to US time. So current GMT time is 4 hours after this ahead. So that means 8:45. I have a GMT, it is 8:45, but actually it shows 4:45. Okay, so anyhow, the providers have set it that way, but you note down around 3:30 GMT, that will be about 23:30 GMT, the highs and the lows in the four majors and two commodity pairs in the live market quote page, and then use that as a reference level for the end of the day, till end of the day. The players are using them as the reference level and try to make the various types of move, either an upward stoppment or a downward stoppment of about 5 to 10 pips or 25 pips. And sometimes they go above the high and stay there for 2 hours, go below the low and stay there for 2 hours, and then reverse the market. And so stoppment, false move, extended move are all quick moves. So all these quick moves are false moves. That means they are all cunning moves. They are all mainly to misguide us. The intentional move is the one which gives us the true intention of the players. Follow that intention. That is going to be the trend for the month. Okay. Then yes, what are the targets for these positions? Okay. Now, as far as the targets are concerned, we aim for 30 pips. If the going is optimal, we aim for 45 pips. The going is good, neck change is more than 30 minutes or 30 pips in all the currencies, then we aim for 70 pips, 75 pips profit. Okay, that is how the exits are estimated. There is no need to calculate the supports and resistance. You keep 30 pips. If the momentum is very slow, pip by pip. If the momentum is optimal, 45 pips. If it is really good, then 75. And when they are making intentional move, always keep in mind, then there is a potency for them, because 2 sessions on the start of the 3rd session, they have to continuously make a move. So they can go to that of the daily limit of 150 pips. So many of the people were telling me on Friday that, oh, they made a huge drop in the case of Euro and GBP, 150, 160 pips. I told them that is the daily limit. They achieved it. That's all. After a pretty long time, they have just done one single day 150 pips move, negative net change. So that is what they used to do it about 6 months back or 1 year back. They used to make every time such moves, most of the days. But now you find only non-farm payroll can trigger and make such moves. Otherwise, the market is making only 25 to 30 pips net change. Then with Australian dollar in a wide range and yen is in a wide range until end of the year. Yes, Australian dollar is expected to be in wide range and it can go up to 88.50 and come down. And that is why I taken a buy position just to book profit when it goes up to another 30-40 pips, and will close it and take sell position there. Then yen is again expected to come down, then breach this low, because once it stayed below that of the initial low, it will breach the low set, and then probably a stop and downward, and then subsequently make an upward move when the traders turn sellers. And so when they make quickly a breach and see that what is the new low, and the new low is not breached for 30 minutes, immediately I'll close my sell position. So nothing to do with the fundamentals and technicals. We only track what moves they are doing it. And okay, once they just trigger all the stops and accumulated the buy position, once the traders turn sellers and the players turn buyers, they don't drop. That's what after the Friday drop, they did not drop further because they become the buyers when all the traders were liquidating in distress condition. So Monday and Tuesday they started gaining the levels. We can give so many names for that relief rally or whatever it is. They are all nothing but attributes. But we need to know what is the true intention of the player. That we need to know, that we will be able to know only after watching for a period of time, about 5 days and 6 days. Okay. What will happen after crosses AUDN and New Zealand yen, etc.? Okay. Now, as far as the yen crosses, USDN is concerned, which is expected to make the continuous upward move till end of the year. My estimated target is around 114. And Euro and GBP are also expected to go up. So what will happen to that of yen crosses? The Aussie yen and New Zealand yen may not make much of a rise, but Euro yen and GBP yen will make very good rise. Hope you are able to understand. Till end of the year, they are expected to make the contrarian move, gaining the levels in the case of Euro, GBP, USD yen, and USD CHF. If you watch carefully, those who have been following me for a long time, you'll be able to understand that they gained consistently by one-sided moves the levels in the case of USD and USD CHF and CAD, USD CAD. Then they made a drop and then again gaining in the case of Euro and GBP, but at that time you do not come across corresponding drops in the case of the denominator currencies. So till end of the year, we will come across the contrarian move. Euro, GBP, USDN and USD CHF are expected to continuously make alternative gains and rise. And USD CAD and Australian dollar are expected to show contrarian move and also wide range swings. USD CAD is expected to gain more and Australian dollar will be making sideways moves. That is how the market is expected to behave as per my forecast algorithm, which can come true or the market can deviate. Only after watching it, we will be able to say whether the forecast has come true or not. So it's only a guideline. Then we have to use the market trading technique to fine tune it on a daily basis before taking trading decisions. Okay, Sherton. I use 150 points trailing stops. Is it equivalent to 15 pips? Okay, 150 points. Fine. That is depending upon your trading platform. I am not sure how exactly they are giving it that way. Okay, no more questions. So I'll try to wind up the webinar. So in tracking the forex market together, we make our tracking very simple. That is, we use the forecast and fine tune it using the market reading. The forecast is given on Mondays for the 5 days of the week. So on Monday, during Asian session, I give the webinar and give the expected market move, which is also recorded in FX Street and displayed under the archives of the webinar. There you can see what is expected to happen in the market. Then, as I told you, that for that of the BOE interest rate decision, they are expected to make the upward spike. This is what the forecast says. Okay, then afterwards we do the market reading by noting down the initial lows and the highs in all the four pairs, 4 majors and 2 commodity pairs, and try to find out what sort of moves they are doing it in the market. So these are all the type of moves they are doing it in the market. Okay, once you identify the move, and we try to find out in what session we are. Okay, European session, and also the primary thing in that is we need to see that the spread between the high and the low is more than 40 pips in order to enter into a pair. Those things I have given it here, and you can go through that. And they only handle two pairs at a given time. And watch those two pairs and try to take positions. You will be able to quickly book profit. So be an opportunity trader. So find out which pair they are handling and accordingly enter into those currencies rather than simply taking the pair in a known currency to you on a daily basis and say that it's not moving, the entire market is moving, my currency is not moving. There is no point in grumbling like that. You have to find out what currency is going to give the momentum and then try to enter into that. And in the event, I kept the hedge orders. I taken the positions now in two and kept the limit orders in other two. So by 13 GMT, when I come back, I'll show to you what has happened to that of the market and whether the orders were got filled and what happened to the holding positions, whether they are making profit or filled my hedge. In the event, if the hedge is filled, what I am supposed to do. Okay, when the position is hedged, I watch for 10 to 30 minutes. If the position is hedged, the market has suddenly moved against me and hedged me. And if the hedging is making loss for 10 to 30 minutes, once you become an expert, in 10 minutes you will be able to identify whether it was filled during stop hunt. Otherwise, calmly wait systematically 30 minutes, and if it is continuously making loss, close the hedge and keep another 30 pips away the another hedge order, the sell stop or the buy stop. Then wait for the market to move in your favor. After the stop hunt, they will make the move in your favor, and once it moves the favor, immediately keep stop at entry and remove the hedge order. There the hedge orders has helped you, or the hedge order is used instead of a stop. So that if you use the stop will close your position. If you use the hedge order, we'll be able to close the hedge order with 1 or 2 pips loss or 5 pips loss and continue to hold the original position, and we'll be able to earn. Because most of the traders, they don't keep stop of the fear that once the stop is hit, the original position is closed, then they lose the money. Once the money is lost, they hesitate entering into the market. So in that, the easiest way is trade without a stop. 99% of the traders are doing it like that. So it is normal trader psychology. So what is to be done? Use the hedging, and if the hedging is making loss, you just close it and keep another hedge on. If the hedging is making profit for 30 minutes, that means the market is moving against. In that event, you simply keep stop at entry in the hedging. Let them drop the market or whatever it is, like Friday. Okay, they made 150 pips loss, drop. Okay, that limit is achieved. Then I close my sell position, the hedge position, with a profit of 100 pips or 120 pips and keep 30 pips below another hedge order. Next day, they started making the rise, and I will trail the hedge order upward, because after the extended move, they make the intentional move. Intentional move is on the upside. That means they wanted to rise 0 and GBP only, and the drops or false move, they just do it using non-farm payroll as an excuse. What happened to non-farm payroll sentiments now? Everybody has forgotten about it. So they know very well sentiments are short-lived in the market. Then make the move according to their convenience and trap the traders. So you can book profit on the buy side. So this is called either way trading using the hedging. Otherwise, simply keep stop at entry, then let them reverse the market after coming down another 100 pips. And once they fill your stop at entry in the hedge and they will continue to rise, you continue to trade on the upside. Simple. So if you use the hedging, you have got these opportunities. Many of the traders, once it is hedged, they don't relate it to time and simply become nervous. I am locked. So those who are not able to use their common sense because of too much drink alone say using hedging is not a trading strategy. But those who are using the common sense will be able to really say that hedging is really limiting the risk and which is giving the either way trading opportunities. So these are all the positions we have taken. I'll come back by 13 GMT, and I'll give the part 2 of the webinar between 13 and 13:45 GMT, and I will review what happened to the market during the gap time before the start of the US session and 15 minutes of the US session, and what happened to the trades, what happened to the levels, what we have seen so far, and from there I'll explain more with regard to market understanding techniques. Thank you one and all for your patience, and see you by 13 GMT. Try to track the market from that of 8:45 to 13 GMT and come back so that we'll be able to learn how exactly we are being misguided. Thank you one and all. See you by 13 GMT.